This is our Forex blog for November 2nd, 2012. And like we do most days, we start with our currency meter to find out which currencies are strongest to buy and weakest to sell. And the new currency meter is a lot easier to read than the older one because we now weight everything. Real-time trend is about 2/3 of the momentum, and the daily, weekly, monthly is about another third. So I give 4% to the monthly because it's very unimportant for real-time trading, 13% to the weekly trend, 18% to the daily trend, and the rest is for very fast statistical comparisons between each currency and every other one. Some of our tools measure the direction, in this case the euro is going versus the rest, and other ones measure the intensity of that direction. So anytime you see like the euro and Swiss today, extreme weakness, you want to trade those against the strongest ones, the CAD, the New Zealand, the dollar. So we want to sell the euro dollar, we want to buy the dollar Swiss, we want to sell the euro CAD, we want to sell the euro New Zealand. I don't leave those other currencies open, so we'll just start with the euro CAD. Notice how this has been trending down all day. And this is what gives you the advantage because you're focusing on the ones most likely to trend. So you might have sold that little pullback right there, right there. You might have got stuck into a tiny loss as it appears it broke down through the low right here. You would have got stopped out with a small loss, and then another pullback trade. And the real key to trading is much bigger wins and losses. You got a small win, nice, okay size win. This is 5 times bigger than your loss here. Huge win, small win, huge win. And most of the time the market will stop at the fib target, so you know exactly where your profit is. If you got into a trade here or here and held on to it, this is where you're likely to get out. It's likely to stall there and reverse. Here's the euro New Zealand, same thing, straight down. You have a nice little sideways rectangle wedge pattern right here. A little bit of a pullback trade right here. You might have got out at the double bottom when it wouldn't go underneath there. Then you have another perfect rectangle pattern. So let's take a look at the euro dollar using our FX trade signals and our real-time only momentum tools and how that can help you trade those pairs like the euro dollar and dollar Swiss. Here's the euro dollar. And starting the day off, you can see that the price is underneath the hourly moving average. This is the point of control of the previous day. That's where most traders had positions yesterday. This is the upper value area, this is the lower value area. Typically when currencies break down from above to below the value area, big trends develop. So we started the day off after midnight underneath the lower value area. It's very likely to go down. This is last week's value area low. And you know, when those levels get broken, you also tend to get pretty decent breakouts. So you can short here and make money. You have some counter trend signal right here and a trend trade here. You can see the market went down, down. 2 sell trades right here, and it went down again. This one right here led to about a 10 pip win. And again, always draw your fibs off the previous swings. If you get a sell signal, you can enter those trades or wait for it to cross underneath the displaced moving average here. You would add a small, maybe 5 pip loss, got short again right here at 99 and out at 68 for a nice 30 pip win. 8 pip win, probably 15 pip win. And most of the time it does not go underneath the 1.618. If you use our fib targets and the market comes down and you see some counter trend signals, the low risk, or I should say the low odds, low probability counter trend signals are gray. Higher probability signals are going to be green for the counter trend. As you can see, this one here led to about a 20 pip counter trend move. This one here, which was a little bit smaller circle than this one, went up about 10 pips. And you can always draw fibs off the last wave down, and if the market gets down to this level, get into a trade. You can see you would have made probably 5 or 6 pips on this trade if you got long right here. You might have made about 15 pips. So you can trade with the trend until the market moves statistically too far, and then our counter trend signals give you very high probability, especially when they're at key areas of support resistance like the 200-day moving average or the fib target of the previous wave. So let's take a look at the dollar Swiss. Very strong dollar. The Swiss and the euro tend to be pegged together. The euro is a little bit weaker than the Swiss, it appears, but especially here at 630. But we're going to take a look at buying the dollar Swiss. We have a breakout trade right here that led to about a 30 pip win. The value area high of the previous week tends to be a major resistance area. Once it's broken, you tend to have continuations with the trend. So you got a buy signal right here, but I wouldn't really take this one until it breaks above this resistance, which it had 3 times. Once it broke above there, it went up about 15 pips. You got a pullback right here that went up about 20-30 pips. This pullback right here worked. And again, you can always draw fibs off of previous swings, and when the market hits these fib targets, if you get a counter trend signal, which you didn't in this case because it kind of gapped up, you never know what's going to happen after a big bar due to news or economic reports or lack of buy or sell orders. You can have big bars. These are normally 4 pips per bar. This one just exploded up, and there was right at double top at the 1.618. If you want to do a counter trend trade up there, always look at our real-time momentum. It is slightly less strong than it was earlier. However, we are quite strong. The 3.0 green band, there's about a 90% chance that above this level is going to run out of steam. So if you want to do a counter trend trade up there, and and the volatility is higher than normal like it was today, you want to get into some trades up there and ride it down 20-30 pips sometimes. This one, if you had sold here at 98, it went all the way down to 70. So it did fall about 30 pips. Keep that in mind when you do counter trend. You're going to have a little bit lower winning rate, but if you lose 5 pips in one trade and 8 in another one, and then you make 20 pips, you're still up for the day, even though you're 1 out of 3. And if you make 30 pips like this, and you lose 5 pips and 8 pips, you're still up over 15 pips, only being right 1 out of 3 times. So when you see signals at key support resistance areas, it drastically improves your edge and your odds.